Time now for Consumer Confidential with KTLA 5's David Lazarus.
He's here with us in studio. Hey there, Laz.
Hi there.
So the market, of course, reacting to the Fed's raising interest rates. And once again, that's happening. And the reaction from Powell, what did he have to say?
Yeah, it's interesting because it all happened again in the last hour of trading. No surprises in the half-point rate increase we saw today. It was expected. Moreover, stock prices already reflect that. The turmoil came after Fed Chief Jerome Powell took the podium and explained where the Fed's thinking is at. Here's a little bit of what he had to say.
I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way.
Okay, so that's the key thing here. And this is what a lot of investors focused on, is Fed Chief Jerome Powell essentially saying we're not going to see lower rates for all of 2023. In fact, they're probably going to go up a smidge more in the first quarter. And then maybe by 2024, we'll see some rate cuts to try to goose the economy again. And that was sort of a mixed message for Wall Street, because on the one hand, Powell was saying, let's give our 7 rate hikes from this year a chance to work. And at the same time, he said that the Fed is leaving the door open for more aggressive rate hikes next year if need be. He did not commit to the quarter-point rate increases that many people had been expecting for the first quarter of 2023. I think a lot of people wanted to see some commitment on that part. So in the final hour of trading, we saw stocks selling, but coming back a little bit, then selling again, finally with the Dow down 142 for the day, which is not bad considering the level of uncertainty that overhangs us. We learned yesterday from the Consumer Price Index that inflation in November eased a bit. It was 7.1% on an annual basis, down from 7.7% in October. But clearly, as Powell says, we got more work to do. And moreover, some sectors of the economy are still feeling the inflation more than others.
All right, we've talked about the price of food. Apparently, orange juice prices will put more of a squeeze on people's budgets.
And it's the food sector in particular I want to talk about. We talked about this yesterday. According to the CPI, even though overall inflation in November was up by 7.1%, supermarket prices compared to a year before up by 12%. Restaurant prices up by 8.5%. Clearly, food is one of the biggest challenges that many Americans are now facing, and rent, of course, in terms of trying to resolve high inflation. Orange juice is now the latest. Now, we saw that eggs are up because of bird flu. Wheat is up because of the war in Ukraine. Why is OJ getting more expensive? That's because of two things: extreme weather and a citrus-related disease that is decimating the Florida citrus crop. In fact, output this year could be the lowest since World War II, down more than 50% from last season's output. Obviously, when you have less supply and demand remains strong, Econ 101 tells you prices will go up. And that seems to be exactly what is happening with OJ. Orange juice futures up 42% so far this year. Clearly, when the futures are up at the wholesale level, you can expect to see that as well at the retail level, to which I say, how about a nice glass of apple juice?